Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is John Butler. He is the author of the book Golden Revolution: How to Prepare for the Coming Standard. And he has over 25 years of experience in senior positions at top investment banks. John, welcome.
Oh, my pleasure, Ivan. Pleasure to be here.
Yeah, it's a pleasure having you on. You see everything that's happening in the UK and all the craziness all on the news basically every single day. Is this an example of what can happen elsewhere? What's your opinion, John?
Oh, absolutely. I mean, what we've seen in recent days in the UK is the proverbial return of the vigilantes in sort of a Western film, but in this case, it's the bond market vigilantes who have kind of said enough is enough with expansionary fiscal policy, expansionary monetary policy, that you can't just keep on doing this forever. And the way the bond market and to some extent the foreign exchange market responded to a proposed package of tax cuts a couple of weeks back without any accompanying spending cuts, it's really quite something. And I think it sets an example for what other countries might face if they try following a similar policy path.
So you see, that's interesting what you said. You see the Fed now they're hiking further and faster than any time in modern history. What do you make of this? Is this even sustainable, John?
Well, I mean, it is up to a point, perhaps. And I do think the Fed has a credibility rebuilding exercise that it sees itself trying to deal with here. But the thing is that with the end of quantitative easing and the increases in interest rates, which have been substantial, as you say, in a way, the Fed has allowed a rearming of the bond market vigilantes in the United States as well. And while what's happened in the treasury market isn't perhaps as spectacular as what has happened very recently in the UK gilt market, nevertheless, I mean, take a look at a chart. There's a lot going on here, and it is questionable, given just how leveraged and indebted the United States is today, far more so than it was in the early 1980s. It's really questionable whether another Paul Volcker type of inflation wringing out exercise can be, is survivable
Right.
without the Fed needing to blink sooner rather than later in that endeavor.
So do you think they'll actually blink sooner than later, or they'll actually
I
stick
do.
this up? Yeah, you do?
I
That,
do. I think the Fed's good for one more, substantial hike to really drive the point home that they mean business. But my concern is the effect that that will cause in the credit markets and, of course, spilling over into equity markets and everything else, I think will be enough to sort of take the ball from there, as it were, and the Fed will then, in what I believe is going to be a context of general market illiquidity,
right.
they will reassess at that point.
Do you think 75 basis points or 100?
I mean, 75 basis points has a nice symmetry around it vis-a-vis that's what they just did.
Right.
I don't know. I guess if they were to want an excuse to already communicate, we're probably done now, then they might go 100. But I
Hmm.
think if they want to leave the fear in the market that they're going to keep a series of hikes going, then I think 75 is the more logical choice from a psychological
Right.
point of view.
Now, with all the craziness in the world and in the market, where is John putting his money? Are you focusing more on silver, gold, or both?
Well, first of all, let's not forget the fact that we are in an inflationary environment. And while we may be nearing peak inflation, it's not as if it's suddenly going to drop to zero tomorrow. And so you really do need to be invested in a way that protects you from that inflation. And that inflation is unpredictable. And so really you want to be where the pricing power is. That
Hmm.
is, you can be invested in companies that may be, very ordinary, low margin, boring as it were, companies. But as long as they have stable margins and pricing power, it's kind of an inflation safe haven. They can pass input costs on to their customers, retain the margins, and indeed, if inflation remains elevated, they just keep ticking away, and they pass on dividends, which tend to rise with inflation, onto their shareholders. So there is a safe haven in the stock market here. You could almost argue that when you get into a stagflationary environment like this, deep value stocks that are cash generative and pay decent dividends, they start to behave kind of like bonds. They at least
Really?
allow you to generate a coupon, as it were, but one that is protected from inflation. So that's one place I'm invested. But as you say, gold and silver, absolutely. I'm a dyed in the wool gold bug. Everybody knows that. But I also appreciate the uses, including industrial, biomedical, photovoltaic, etc., that silver has to offer. And indeed, I still think that silver is historically undervalued vis-a-vis
Right.
gold. And we're in the midst of a long-term retracement back to a ratio closer to 60, or perhaps even below, depending on the industrial side of silver demand.
Now, we're seeing huge numbers get depleted from the COMEX and LBMA silver. And what's your opinion? Will this trend continue?
Well, it certainly could. I mean, it's been going on for a while. And if you
Hmm.
take a look at the state of the world, including some very unpleasant developments in Ukraine, around Taiwan, et cetera, you could argue that just about everybody, from large institutions to households, would want some physical gold on hand in the case
Right.
that, that things really seize up with the global economy, geopolitical war, God knows what. So yes, I don't see any reason for that to suddenly reverse. Now that said, I mean, let's face it, there is some question of some questions around just what happens as stocks get very low.
Hmm.
Is there a way to move stock from London? We saw a couple of years back at the start of COVID when there was the run on 100-ounce bars at the COMEX,
Yeah.
and then they made LBMA 400-ounce bars eligible in a way they previously hadn't been, to help ease the tension in that. So you might start to see some of these antics as supplies continue to dwindle.
Do you believe they will change the rules in COMEX as we get close to a breaking point like they did back in the Hunt brothers?
Look, it's not just the Hunt brothers. There are many examples of similar things happening historically. And what you find when situations like that arise, you learn the real reason why the laws and the regulations are written the way they are. The
Right.
fact is, the people who are ultimately in charge of this, their job is to protect the system. It's not to provide for the best possible price discovery. It is to protect the system. They will
Wow.
allow robust price discovery until the system is threatened. And when it's threatened, then they will rip up the rule book as required to ensure some degree of continuity in the financial system, in the banking system, in the exchanges, so on and so forth. So absolutely watch this space if indeed stocks continue to dwindle at a rapid rate.
That's you said it perfectly. Do you think it'll happen something like the nickel market? You like will it happen this year, that huge blow up and then they changed the rules? Did you know what happened there?
Well, what happened basically is you did have an extremely large counterparty, get caught, with their what swinging in the wind, and it was just seen as politically impossible to force that one,
Hmm.
due to let's face it, there was a Chinese institution involved in this, and it was just decided that the LME just didn't want to go there. And so, yes, as you say, I mean, they made an exception. They tried to invoke force majeure. Come on, that wasn't force majeure. Give me a break. But they tried to cloak it as such. So yes, these sorts of shenanigans will happen when and where the stability of the system itself is threatened, and price discovery will, at least temporarily, go out the window in those situations.
We interrupt our program to bring you this important message.
Hi everyone, we just hit 60,000 subscribers and we want to thank each and every single one of you guys. Please hit the like button and subscribe, and we'll talk to you soon. Now, John, moving on to a different subject, we see China just came out. We're recording this on October 17th. They just came out and they stopped LNG sales to Europe to make sure basically their own households this winter have enough gas. How dire is the situation for Europe going this winter in 2023?
Oh, look, Europe has really ended up in a bad situation, which is somewhat of its own making, somewhat not. But I think, they did have a difficult hand to play, and they
Right.
haven't played it very well. And so now they're staring winter in the face. And yes, they've tried to build stocks. And yes, they've got this arrangement with the US. Gee, how convenient for the US. They've got this arrangement now to try and bring over substantially more LNG, notwithstanding logistical limitations. I mean, the port of Rotterdam and a couple other transit points can only handle so much of this stuff at a time. And
Wow.
so it really is, they're really swimming against the tide, as it were. And this may be an unusually cold winter because not only do you have the third year in a row of a global La Nina weather pattern, which implies a colder than average European winter, you also have the residual ash in the atmosphere as a result of that huge underwater volcanic eruption, which
Hmm.
I believe was in the Tonga region of the South Pacific. That ash is still circulating in the atmosphere in a quantity sufficient to potentially magnify what would otherwise be a slightly below average winter in temperature terms. So Europe is really stuck in a bind here, and there's really no easy way out. They're going to try to muddle through, but it's going to be a rough ride.
Well, John, we really appreciate you coming down to Wall Street Silver. Do you have any last words for us?
Oh, look, just you have to look at reality as it is. You can't be Panglossian about things like this.
Right.
Stay defensive. Don't put all your eggs in one basket. Please do take my advice that deep value, cash generative, dividend paying stocks are in this sort of bizarre context that we're currently in, actually kind of a safe haven too. So don't throw the baby out with the bathwater and pour everything into precious metals, I would say.
Well, thank you so much, John, for joining us at Wall Street Silver. And of course, we'll have your social media and your book in the description below. Thank you, everyone, for watching.